Yesterday, the president did announce a raft of measures that will be touching on reducing the taxation burden for Kenyans. Right now, I want you to join me on our Super Bowl as we just walk you through what these measures mean. And of course, we are trying to break it down for you. One of the biggest taxation measures was that workers earning 24,000 shillings and below will actually be getting a 100% tax relief. So what does this mean really? So in actual sense, it simply means that anyone earning 24,000 shillings, you'll be taking home 23,000, because you'll actually be taking home 23,000. When you look at what this simply means is you'll have more disposable income of between 1,000 and 1,400 shillings. And of course, this is a very important measure when it comes to safeguarding the workers. Let's go to our next slide, where we'll be looking at what the pay-as-you-earn taxation relief will mean. Kenyans are currently paying 30% of whatever you earn to the tax authorities. The president did also announce a reduction by 5%. This will bring it to 25%. So in actual sense, this will simply mean anyone earning 47,000 shillings and above, you will be getting a relief of 5% on the money you usually pay every month. Let's give you a quick example. It will create an additional income of 4,241 shillings monthly for those earning 50,000 shillings and 7,229 for workers earning 100,000 shillings and above. This is one of the very important measures that the government has taken when it comes to safeguarding the working class in the country. And finally, to our next slide, where we'll be looking at another key aspect around this 25% payee. It will also create additional disposable income of 9,717 shillings for those earning 150,000 shillings and 27,000 shillings for employees earning over 500,000 shillings a month. So, if simply put, if you're earning 150,000, you'll have 9,777 shillings more on top. And if you're earning 500,000 shillings, you'll be taking an extra 27,000 shillings, 229 in terms of the payment when it comes to what you can be able to save from these particular taxation measures. Well, we want to debunk this particular matter further. And of course, we shall be speaking to Martin Kunyiha, who is with us here to just shed some more light into this matter. And he now joins us here in our studios just to talk also about the critical aspect around credit reference bureaus. And we'll be definitely getting to hear from him. Thank you for making time for us.
Thank you, Abby.
And first off, what is your immediate reaction to these taxation reforms that were announced?
I mean, it's in the time of crisis, it's what is key is that we need to be able to cushion the wananchi from the impact of it, loss of jobs. And I mean, we're in isolation right now, so that will definitely have an impact. So the measures are actually very good to ease and cushion the wananchi, similar to what we saw happening early on in the banking sector in terms of trying to manage to increase liquidity for individuals to be able to access loans where need be.
All right. And you come from the credit background of the reference bureaus.
Yes.
You are from Credit Info.
That's
One of the major landmark announcements was that there'll be temporary suspension of Kenyans being listed. Break this for us as a 5-year-old. What will this mean?
I think let me take you back a step and just address how the credit bureau mechanism works. So from 2014, the law was changed where it mandated all regulated entities, banks, to share both positive and negative information on individuals who borrow. So what that technically means, from the day you pick up a loan with a bank, that information is reported to the licensed credit bureaus. And the repayments on that loan are reported on a monthly basis. So every month, the bureaus get information on all the loans that have been issued by the banks and how those loans are repaying. The current proposal to hold back on the listing on accounts that are in arrears or that are in default is actually not something that is very uncommon. It's just in the manner in which it is done. So in previous crisis situations and pandemics around the world, especially in the West where they've had bureaus for longer periods, what tends to happen is that the central bank or the regulator would inform the bureaus and the banks to offer those people that may be affected by the pandemic or the crisis some sort of payment holiday or reprieve on accounts that they're paying back on. So this does not mean that it's not going to be reported, does not mean that you don't pay.
Yeah.
You continue paying.
Very important.
Information will continue being reported. It's just that because of the current situation that you're in, the information will be reflected in a way that does not negatively impact you because the situation and the environment is understood to be hostile and may be challenging for people to keep up with their payments.
I was having a question from Audi, a colleague of mine, and he was asking, in case you've taken a loan with, say, ABSA, which is Barclays, you are already listed. With this new order, if I go to another bank, say Equity, can they give me a loan? If I was listed already by Bank A.
Okay. Another thing that people get confused about, credit bureaus do not tell banks who to lend to or who not to lend to.
Okay.
In actual fact, credit bureaus is the only mechanism that individuals or businesses have to vouch for them with a lender. Now, let me paint the picture to you this way. Imagine trying to go to, or you're trying, you have a relative, John, who comes and borrows money from you, 500 shillings.
Yes.
You give John the 500 shillings out of pure trust, and you believe that he'll pay you back. He doesn't pay you back, and then you go and you tell Charles, John didn't pay me. Now, if John is to go to ask Charles for money, what's the likelihood that Charles will give him money? It is unlikely because there is a trust that has been broken, or his history tends to inform that it's unlikely that that money will be repaid. Now, coming back to the situation with the banks, I was saying earlier on, the bank's primary objective is to protect depositors' funds. Now, they have deposits, which they are then lending out to individuals.
Okay.
But their primary objective is to protect that deposit from these other customers of theirs that they have. So when they are lending, they go through different checks to be able to ascertain your credibility to be able to access that facility or not.
All right.
Now, the credit bureau speaks to that story. Is John good for the credit? Yes or no? Otherwise, without the bureau, there's no one to vouch for you.
Okay. Perfect, perfect. And finally, how soon or how long will this temporary suspension last? By any estimation, do you know when it will be lifted?
I mean, we'll need more direction on how this will happen. As it is, the current format that the banks use to report to us provides for deferred payments. So I think we'd have to wait for further direction on, to the banks and ourselves, how we'll treat this information and how it should be reported.
Thank you.
But with most things, probably we are hoping within a 3-month period, then this should be over.
All right.
Yes.
Thank you very much for speaking to us, Kamau Kunyeha from Credit Info. Let's move on to some more